For Mining Clips, I'm Christina McCarthy with McEwen Mining. We're here another session at the bar for PDAC 2016, and we're gonna talk about some cool stuff today. So, Mickey Fulps, tell me something interesting.
Okay, it's a well-known scientific fact that all geologists are the only alcohol-based life form on Earth. And not only that, we've got a little Darwinism going on here today because we all started as field geologists and now we're mining analysts. Let's fuel our chat today. Let's fuel up alcohol-based and go from there.
Cheers. So today, an awesome day in the markets, guys. Gold ripping, it closed at 1270, oil up at 38, copper at 228. What do you guys think is going on? I mean, there seems a very cautious optimism out there right now. Markets seem like they're coming back. What do you guys think?
Absolutely. No doubt, I think driven by hedge fund buying over the last week or so and probably some short squeeze. Brent?
Yeah, I'd say it's definitely changed. We picked it up in the newsletter in November. We started buying stuff. I brought Joe on to start getting into the bigger companies, bigger than I cover anyway. And so far he's 2 for 2. First Lakeshore, and now Claude taken out. So things are better. I think, to me, fundamentally, we've seen a change in the value of the dollar currencies, zero to negative interest rates. That's all made a big difference. Don't you think?
Well, before we move on to discussing exactly what's gone on recently, I think it's worthwhile reflecting what's changed since the last time we were at the bar in Vancouver at the Cambridge House versus now. So I ran some stats just before I came here. Wow. Gold is up, I know, I'm that kind of person. It's very impressive. Gold is up 15%. We have the GDX and the GDXJ up in excess of 50%. And we were discussing at that time what companies should perform well in a bull market. And one of the theses that we discussed was a bull market, rising tide floats all boats. And what's interesting as I track some of the numbers is some of the incredible outperformers have been the companies that were very distressed, those that had very tough balance sheets, that were on the verge of bankruptcy, and a couple of those have performed in excess of 128%. So then the question to all of us here at the table is this sustainable? We have seen a run in the gold price every year, really at the start of the year, and then a significant correction throughout the year. Post the PDAC, often the PDAC is close to the top. So what do you think is going to happen over the near term leading into the summer? And do we have enough interest generally from generalists in particular to continue driving interest in our sector from the gold price and the equities?
Let's give Joe a turn here.
Okay, I think the other thing that we talked about during that session was that Nikki said right near the end that I can't wait for the market to go up and then we'll all look smart. And I think maybe that's a little bit about what Brent was just saying there with the 2 for 2. I don't know if it had that much to do with me. But saying that about what Nikki was saying about the leverage, we certainly saw that with Barrick. And I was just talking to a friend who works with Coeur, and they have a long-term debt to EBITDA ratio about 2.5 to 1. They're up 200%. From January, from year to date, because they have a big debt position. It's not because silver moved. Mm-hmm. But right now, a lot of these silver companies, because of the M&A they've done, they've become gold companies, whether it's Coeur or Silver Standard. And now Silver Standard, the acquisition was Claude Resources, which is a gold-producing underground asset in Canada. So a lot of these guys are now looking for assets that are generating cash flow, trying to get them before, hopefully, that they think the gold price is going to run, and get them now, and diversify their risk with respect to geopolitical risk. So I see that being a theme, and there's only so many assets out there that are like that. Yeah. But as we've seen, we went from the big cap, like the Barricks and the gold producers, outdoing a lot of the indexes, and now we're moving down to the mid-tiers, and hopefully we'll get down to the exploration companies soon.
The trickle-down effect, right? So you talked a bit about silver companies becoming gold companies, or gradually. Does that have anything to do with the ratio of gold to silver? Mm-hmm. Now, the historic ratio, probably since the bull market started in 2003, till now is averages about 55, maybe 55 to 60. On Monday, a week ago, the gold to silver ratio was 83.3, and I've only seen it exceeded for 1 or 2 days post or during the global economic crisis in 2008, where it briefly hit 84. Anybody have a take on that? Usually when gold goes up, silver is more volatile and will go up more.
I think that's a really important fundamental thing we're seeing happening. This time it's gold, and it's intelligent investors. I think more getting into this sector, if you will. To me, the silver trade, that's where your wing nuts and nut jobs end up.
I couldn't agree more with that.
And let me push my thesis a bit more here, Mickey. And I think what's happening here is that certainly in the States, these wing nuts and nut jobs and such, they're right now too busy
The Silver Summit guys, right?
Yeah, the Silver Summer guys. Well, they're all at Trump rallies right now, so they're not really getting into they're not back into the market. So until that happens, I think it looks good. Right?
You're saying they're all at Trump rallies? That's why they're not buying silver?
Yeah, they're too busy somewhere else.
But having said that, some of the silver equities have been performing incredibly well, particularly those that are high leverage. So even though the silver price, I agree, we've got very unusual ratios with silver to gold, but the underlying equities have been performing well. Now, a question that I've been asked, and I'd like to ask this audience too, is the Trump effect. There's a lot of debate about whether or not the enthusiasm for Trump and the potential for him to get in power, and that's influencing the gold price, which is obviously different thesis to the more fundamentals in terms of what's going on globally with currencies, with debt, with NERP, et cetera, et cetera. We've got two Americans here. What's your perception of?
I don't see that connection at all, personally. I don't think that the current political situation, whatever you think about it, whichever side you're on, Trump or Hillary, I don't think that is what's driving the gold market. I think the queasiness, the uneasiness in the markets, and I am also a strong proponent of the idea that hedge funds have moved big time into the commodity space. Because it's not only gold, it's oil, it's copper. Iron ore was up $20 a ton today. Now that's not traded on the world market, but Christina, give us a take here.
Well, actually, I have a question for you. So everybody knows my boss is a very big gold bug, Rob McHugh, and he has been predicting $5,000 gold for quite so many years now. What do you think?
When pigs fly.
Year? What's that?
When pigs fly. And that doesn't mean that I'm not a bit of a gold bug, but I also want to think of myself always as a realist. And even when gold was on its big run and it actually intraday hit over 1908 in New York that particular day on September 8th, 2011, it's ingrained in my pea brain.
Yeah.
I was very adamant at that time, gold will not get to $2,000. It never did. So, the gold market, no matter how speculative it becomes, that's a big, big upside, and I don't see it happening, even $2,000 an ounce. Anybody?
I mean, personally, I don't want to live in a world with $5,000 gold.
A lot of people say that.
That's better own a bunch of guns and bullets, right?
Well, did you ever see that movie, The Road? Yes. And there's a scene in that in the movie, or in the book especially, where this guy's traveling with his family, and they just, they're just awful, end of the world type thing. They find a bunker and they get down into it, and they're just rifling through everything, looking for, whatever they can get. Food, bullets, and there's gold bars, and the guy's like, doesn't even need them. That didn't matter. It was food and bullets.
Yeah, well,
and I don't want to live in that world. I guess basically what I'm saying.
Yeah, but
No, but we all have the best training exercise, which is The Walking Dead. We know what we do in that world, that of $5,000 gold. What I think is, what I think is really interesting right now, and it's a question that I'm asking myself, is that if you've been exposed, it was very easy to start being enthusiastic about the sector in January because we were arguing, I think, in hindsight, rather well, that we were closer to the bottom than we are to the top. But we've had such a parabolic move with the underlying equities. The question I'm asking myself is, how sustainable is this, and what do I want to be exposed to going forward? And I think we've got three themes emerging. We've got M&A, that's just been touched on, and once we see M&A, it's a bit like a bought deal. It's like a sale at Saks Fifth Avenue. Is when something becomes the next hot thing, everybody jumps on board. So what we're seeing is pretty interesting. We know companies can't grow through the drill bit, so they have to acquire. And I think that says something interesting about what's going on in the world today. And will this deal that we've seen in combination with the price, will we start seeing investors again demanding growth? And will that help drive the underlying valuations, not just as a reflection of the gold price? So
I think what we need, number one, we need this to be sustainable, and no one knows it. If it's going to be, I think it's going to be 2 steps forward. It should be 2 steps forward and 1 step back, because that's how bull markets ought to work. I think what we have to see next is monetary raises. If you remember, in January of 2009, it started with Barrick and Newmont doing multi-hundreds to $1 billion raises. It filtered down by the end of January to Osisko, which was a very small gold producer at the time, raising $400 million. And by April, every junior was back on track. 2009.
And look what happened.
yeah.
Almost every bit of it was wasted.
Well, yeah, I'm not saying, but valuation
No, but you bring up
went up, and at least we can trade stocks and make money. I mean, that's what we're trying to do, right? You're only buying a stock to make money.
I would agree. I mean, there's a difference between a great asset and a great share price. Sometimes those two things aren't correlated, because you can make a huge amount of money out of crap. We discussed this last time. As long as you sell, you always have to sell. But what I think is really interesting at the moment is from the company's perspective, the market will do what the market will do, and the gold price will do what the gold price will do. But the one thing the companies can control is when they issue equity. And the one thing that concerns me is these companies are seeing a bit of life in their share price. Are they going to hit the bid? And if they hit the bid, they remove all the tension out and talk out of their share price, and they remove the demand. And then the journalists step away from the sector. Again, we saw this happen last year, going, these guys don't understand how to run their businesses effectively. And one thing I would like to see is companies have the faith in their underlying assets that some of their investors do, and wait until people are screaming for your paper, not the first time your paper moves 20%.
Yeah, it depends on how desperate they are for money.
That's true. That's a really good point.
Your turn.
Pierre Lassonde used to say, you feed the ducks when they're quacking. That's it. And so when there's demand, you go and do it, because you're not sure if that's going to happen again, because we've had 3 years of no demand. And so they're not sure if the gold price is going to go the other way. So people will take the bid if they want to and be opportunistic. The whole issue for me right now is like, yeah, we've seen M&A, but the M&A is obviously all share transactions, no cash, because nobody has any cash. And then it's not growth for growth's sake. Right now, it's all been very suitor specific. What do I need? And what's out there? And there's not been a multiple bid since Malarctic. So we haven't seen people competing. The first compete we've seen is really the compete for Gold Standard Ventures equity between Oceana and Goldcorp. That's the first time I've ever seen something like that with a junior company. Right. And that's very unusual.
Competition. We
yeah,
need some competition,
and then that's the whole thing is
what
this
you're
competition.
saying.
Yeah, she wants to say something.
Oh, okay.
No, sorry, I'm on a bit of a roll.
Okay, I want to hear it.
Well, you're not drinking your beer.
Sorry. No.
She's talking.
No, but yeah, I think Joe raised an interesting point about the companies are not making money. But if you look at the Australian producers, for instance, they are generating a very, very significant amount of cash, because they very quickly reacted to the gold price retraction. They bought assets arguably at the low of some of the majors, which is a business model that one should follow: buy at the low, sell at the highs. They very quickly turn those assets around, and they are generating meaningful cash. And so I think it's kind of interesting to look towards what the Australians are doing and how that will influence. And I'm not just saying this because I'm Australian. I can be objective about my own culture, but we're cultured. But they are actually generating a lot of cash, and we're yet to see the Australians enter the fray in a really, really meaningful way, other than buying assets off the larger companies.
And despite the fact that gold, I dare say, is at an all-time high in Aussie dollars.
Yeah.
And Canadian.
Yeah.
Maybe not Canadian.
Close.
It's close.
I would say.
But I think that's going to come to an end. I think we're going to see the gold price start backing off a bit in Australia and Canada, but rise in U.S. dollars. So really, if there was a good U.S.-based story, that might be interesting to get into. And I'm not,
Yeah.
there's really, I can only think of one junior company that I'd be interested in, and they went and bought a deposit in Canada that's kind of a rat shit, really. So it's, I don't know where to go.
One thing I would say is regarding the Canadian dollar, the reason the Canadian dollar has gone up is the price of oil. There's absolutely, we did a piece about 2-3 weeks ago, the correlation of oil and WTI and the Canadian dollar, positive 0.97. That's nearly perfect. I've never seen a long-term correlation higher. So the Canadian dollar is going up because oil is going. The dollar index, despite the usual thing that when commodities go up, index is going down. Dollar index closed today at 97.1. So this is real in terms of dollar value, is real and not strictly related to the U.S. dollar index, which it has been for most of the last few months.
Yeah.
So where does Rob want to go? I mean, where does he want to go pick up the next mine? Where is he looking?
Well, Rob would always be, there's this idea, you don't want to grow for the sake of just growing in size, adding ounces, just growing to be big, because that's just the wrong idea. It's growing your company and increasing shareholder value. So how, and we've looked at a lot of projects out there, and you start to sort of like peel back the layers of the onion, and you find all of these change of controls and the golden parachutes, and then, or maybe the actual deposit is limited in geology and geology upside, and the actual exploration, because Rob's a very big he lives higher up the risk scale, so he loves that excitement of exploration upside. And then there's does it make in the jurisdiction, right? So there's all these components, and like I said, we've looked at a lot of things, and we could. What were you going to say?
Well, no, I was just going to. You just led me into the question. We've looked at a lot of things. Give us a number. How many? Can you do that? And it doesn't have to be exact. How many gold companies have you looked at, and how many are on your possibilities list? We talked last time. My guys have looked at 285 gold acquisitions and modeled those, and looked at things now. We find maybe a dozen or so that look good to us.
Yeah.
Is
Same
it similar?
Thing. Same thing. We've looked at so many, and I could count on one hand how many projects would actually look good, and I think that would work well with our idea. And
for us?
Yeah.
No. But also, it's got to have. It's got to Rob has this is sort of a 3-tier criteria. Does it have a low capex? Is the IRR above 20%?
Absolutely.
And and when's the payback? When are the shareholders going to make money? And Rob's always been Rob doesn't take a salary, and not that he really needs to. He hasn't, and he owns 25% of our company, and he's very aligned with the shareholders that way, and he'll make money if his shareholders make money.
But then the question becomes, what assumptions is everybody looking to view that investable universe? Because obviously the level of attractiveness changes depending on currency, gold price assumption, cost assumption. We've seen deflation in every labour input. So a lot of these assets that looked very unattractive 18 months ago, given the decline in all the input costs, are starting to look better on the scales.
I think a lot of that probably has to do with the strength of the U.S. dollar.
Yeah, I don't buy it. I mean,
Australian currency.
my experience has been that most of these marginal deposits of any sort, they stay that way no matter what. I would guess maybe 30% of these deposits work with a higher gold price. The rest have fundamental problems that just don't work.
But I think we all agree that there's a paucity of decent projects out there. But the problem is, I think we all know what those decent projects are, and most of them are very highly valued because there's a scarcity effect at play. Yeah. So if they're highly valued, if you're a deep value investor, it becomes tougher to buy them. So as you look at the investable universe, it's to look maybe down is the tier 2 assets, those assets that maybe don't look so compelling yesterday, but are looking more attractive today. Yeah. And as long as
like a stale beer over there.
No.
That'll do.
No.
That's only at 2 a.m. when the bars are closed. Okay.
I think you can't change the geology, but you can work on everything else. So if you're
change
You can't change the geology, but you can massage the other elements, and so I think it's going to be interesting.
I saw that in Australia with this mine. I saw a stall with Newmarket. I mean, there's really no way that thing should be making any money, but it does. They do remnant mining, they do just-in-time reserves, and they keep that thing going, and they actually generate free cash flow. Not a lot, but really, you go from saying, okay, I want a high-quality asset that I'm not embarrassed to own. That's how restrictive you get because you don't want to lose any money. Mm-hmm. And now you're going, I'll take this really nice asset, but maybe, they got another asset over here that doesn't work right now, but maybe it works at $1,300 or $1,400. So I'll take that. I'll take that over another company with the same thing, but without that. Mm-hmm. And then I'm getting to the point, the next step would be to saying, all I've got is this levered asset, and do I buy it?
But
it's sort of like, I don't know, Dante's Inferno, the different levels. How far do you want to go to hell? But I mean, that's sort of where we're getting to right now, is that I always want something that's generating some free cash flow to sustain the other operations at least. But if they've got some leverage, then I get a little bit of that if gold does run.
I would argue that 20 years ago, most of the assets in production, everybody would have been embarrassed to own them. I mean, it's through the viewfinder of today that we look at our assets, and we've had, whether it's technology improvements, like heap leach before the heap leach technology was advanced, nobody in their right minds would have wanted to obviously own a low-grade deposit that was only amenable or economic using heap leach technology. So there are step changes that in technology that change the function of which you view an asset. To me, I keep coming back to the fact that there are very, very few decent assets out there. Yeah. And I don't think there's the unicorn that everybody is looking for, which is an asset that no one has discovered, that makes sense at $1,100 gold, that can produce meaningful cash flow, that can be used as a lever into growing your business or whatever the strategy is. Everybody's looking for that asset, and it doesn't exist. That's not it's
not found.
Yes, which means we need to see exploration.
Which exactly, that's what we're doing. That's what we're all here for, really, is to find that one that's going to go up 10 times. And I think they're out there. It's just getting more and more difficult to find them. But I feel real lucky because we get to travel the world, look at these things in person, and make a decision. And, we don't got to buy anything we don't want to. That's great.
That's really true, and I think the bottom line here is, and I'm going to go back to when I first did gold exploration, and I'm going to date myself here, 1978 in Nevada, and we found Tonkin Springs during that program. We found Kinsley Mountain. Those were developed by different companies, but we found 2 producing mines, albeit small. But our threshold at the time was, and this was with Real Algam, one of a major mining company, our threshold was 100,000 ounces at 0.3 ounce per ton gold, not grams. That would be 10 grams of gold. Yeah. So that's what our technology has done. And I think I'll end it there by having a toast, and I think you'll all, as geologists, agree with this. Every good geologist knows that grade is king.
Yes.
Cheers.
Cheers.